Tantor Audio, a division of Recorded Books, presents The Masters of Private Equity and Venture Capital, Management Lessons from the Pioneers of Private Investing, by Robert Finkel with David Greising, narrated by Walter Dixon. Introduction. Robert A. Finkel, Prism Capital. During dinner when I was young, the conversation frequently turned to business, a topic that often prompted my father both to entertain and teach with an almost vaudevillian impersonation of a Harvard Graduate School of Business professor named George Doriot. In a voice that combined Peter Sellers' Inspector Clouseau with Colonel Klink from the Hogan's Heroes television show, Dad doled out Doriot's truisms like so many Danish cookies from a blue tin on the countertop nearby. I didn't know it then, but Professor Doriot widely was considered the founding father of venture capital and private equity investing, even in the days before venture capital built Silicon Valley and private equity reinvigorated thousands of companies. When he formed American Research and Development in 1946, Doriot did more than raise a pool of money that would go on to fund digital equipment and other startups. He created a way of thinking and operating in business, pooling investors' money and deepening its impact by putting discipline, accountability, and a sense of purpose to work on its behalf. By harnessing the capital and commitments needed to support innovation, Doriot was introducing a new chapter to the history of capitalism. The Doriot bon mots that my dad tossed across the dinner table no longer survive. But as I reviewed Doriot's writings recently, I found a passage that captures the essence of his thinking and shows why his voice rang so powerfully, not just among Harvard Business School graduates, but also among a new industry of private investors. The study of a company is not the study of a dead body. It is not similar to an autopsy. It is the study of things and relationships. They are very much alive and constantly changing. It is the study of something very much alive which falls or breaks up unless constantly pushed ahead or improved. It is the study of men and men's work, of their hopes and aspirations, the study of the tools and methods they selected and built. It is the study of conceptions and creations, imagination, hopes, and disillusions. What Professor Doriot described, in his misleadingly simple phrase as the study of a company, is really the essence of what private investment is all about. Companies are hardly cadavers. Rather, they are complex, living networks of people, capital, products, and markets. Likewise, private investment is not a simple transaction of buyer meets seller. It is the beginning of a relationship, one that requires nurturing, discipline, sharing, and accountability. If the relationship works, the rewards are rich. If it does not, the company suffers, and eventually so does the private investment firm, because it shares responsibility for the failure, especially in the eyes of the investors who support the fund and expect success. If Doriot's surviving teachings are quotations from a founding father of private investment, then the lessons contained in this book are the embodiment of his ideas by the modern masters of what is now a full-fledged trade. Just as Doriot was a mentor to hundreds of would-be business people in the mid-20th century, so these present-day practitioners can be mentors to people today who strive for achievement as managers, investors, or students of business. A growth in scale. The people who share their experiences in this book are leaders of an industry that has built a track record that merits attention. Even in the face of economic uncertainty and rising public scrutiny, private equity and venture capital investment has continued to grow in scale and impact. As recently as 2000, large private equity deals, those valued at over $1 billion, totaled only $28 billion worldwide. In 2006, that number reached $502 billion. And in 2007, private equity firms put together some $501 billion of such large deals, in just the first half of the year alone. Between 2000 and 2007, a record 2,173 venture capital funds raised approximately $272 billion. In 2008, the pace of private equity investment slowed as the availability of credit dried up and
Sample complete. Ready to continue?